Angela, tell us a little bit about some of the things you think a client should always have on their invoice.
Some of the key things that you need to have are a unique invoice number, invoice date.
Yep.
You want to have who it's billed to, proper name of the company, proper address. If there's an email address of where you're sending the invoice, it's nice to have that on there as well. You definitely want to have the invoice terms, and a due date is also helpful.
Right.
What do the invoice terms mean? Net 30 days from date of receipt, or net 30 days from date of the invoice. You also want to list out the types of services or product that's being sold to your customer. It's best to have that detailed out, and you need to refer back to a purchase order that the company has issued to you. And in that purchase order, there may be specific terms or items that the customer is requiring you to detail out in the invoice. So you want to have that. And then finally, the amount that's due from your customer.
Seems easy, but often people can forget one or more of those things. You can use QuickBooks or any kind of accounting system nowadays to produce an invoice, a nice looking invoice. Yes. So the actual ability to produce it is not an issue. It should be easy, but you've got to make sure that all of those things are in there. And we see many invoices that just say 30 days. Well, 30 days from what? Is it receipt of goods? Is it date of order? Is it date of invoice?
Yeah.
Seems obvious. And you're in a rush to get that invoice issued. You might miss some of the real simple stuff, like Angela just mentioned, that ultimately could mean that you have a problem. Your invoice could get rejected by your customer. Say if they have a PO requirement, right? The POs typically will tell the seller exactly what they need to do, right? We see that a lot.
Yes.
So again, look at your PO. If you don't have a PO, contact your customer, get the right contact information. You don't want your invoice going to the wrong person. Maybe they've got multiple offices and AP, accounts payable, is in one place, and you sent it to the place where the goods went. Again, common stuff.
Something else to think about is if you get a purchase order from your customer and it's for a specific amount and you end up billing it for more than that purchase order amount, don't just raise your invoice to where it doesn't match your purchase order.
Right.
You want to make sure you go and get the proper change orders that may be necessary in order to get that invoice paid. Otherwise, your invoice will get kicked back because it doesn't tie out to the purchase order that was issued.
Exactly. That's a really key point, and we do see that. The number of times an invoice can get rejected, and sometimes just not rejected, but just not paid.
Yeah.
And we'll make calls and say, hey, have you got this invoice in your system? And it could be a few days down the road, 2 weeks after the goods have been delivered or the service has been performed, and unbeknown to everybody, an information was missing on the invoice. So again, some real simple things to remember.
Yep.
And once you get into a pattern of making sure that your invoices have that quality information on them, you'll find, whether you factor or not, you'll find you get paid better.
Yes.
The last thing we want for any of our clients is to have an invoice that's delayed because of something simple that could have been done when the invoice was issued.